TradeprofessionalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome to our frivolity. This is Brian here. Hope you guys enjoyed Daily Brief through the week. And hopefully you were able to tune in for the Coinergy show that we did on Wednesday. Actually, we highlighted one specific cryptocurrency that's setting up a bullish setup, and it looks like that's just rocking and rolling. So never a dull moment around this place, that's for sure. Markets all over the map here, though. I think probably the biggest thing that you should take away from today is the third Friday of every month is the options expiry, the monthly options contracts, which are the ones that most people in the public, if they're going to trade options, they trade. They have the most liquidity and heaviest open interest volume, that kind of stuff. But 4 times a year, we have a funny scenario where the quarterly options contracts and futures contracts and indexes, index options, stock options, all expire. And around these quarterly events, this is the ones that the institutional players primarily use. If you're relatively new to this, then not a bad idea to write it down. It's December, March, June, and September. March, June, September, December. Think of it that way. So here we are, September 2023, third Friday of the month, 15th. Options expiry. There used to be an exchange in Chicago called Chicago One, and they tried to get individual stock futures trading going. It was pretty popular, especially back in the dot-com boom. People like to trade futures contracts on things like Microsoft and Intel and all that. Kind of lost interest. I'm not even quite sure why, but people kind of lost interest in trading stock futures. And they actually shut that down in 2020, I think, just lack of interest, especially when they started shutting down all the individual open outcry trading pits and floors. Then the interest in the stock options, or excuse me, stock futures contracts really fell off. So in years gone by, before that happened, they used to call it quadruple witching. So it was sort of like futures, options on futures, options on indexes, and stock futures, and options on stock futures all expired. But they don't have the stock futures anymore. So primarily just call it triple witching now. And regardless, also too, it looks like a couple of the commodity contracts are going through rolls right now, which means the institutional players that have to be in these contracts, they have to be in the front month or whatever this sort of spot contract is. And as the calendar moves on, like crude oil, for example, there's equal participation in the October contract and the November contract, or excuse me. I think it's October and November. In fact, actually, here we can just look at it. And as a result, you get some really screwy price action because one contract is one level, another contract is another level, and they're trading about the equal size. So what is the real market for crude oil? Is it $90.65 or is it $89.93? Like, what the hell? So, and you see that they're basically trading the same volumes. So a lot of institutional players are rolling out of the October and into the November right now. So it makes for very, very choppy price action. I think you all know this, but anyway, we were thinking about doing a boot camp, sort of a get what's going to take to get yourself to be a day trader in the market. Um, we were going to do sort of a live program. Actually, we were even thinking about doing it this fall. And actually, speaking of which, sorry to derail, but super important. Anybody who was interested in that, we have about a dozen people roughly that are interested in that. Big meeting we have to have at TRI tomorrow. So be here at 10 a.m. Pacific time, basically about the same time as what we do these daily brief shows. Um, and um, and we have to make a formal decision whether we're going to do this fall or whether we're going to do it out in maybe in the winter time or something. I don't know. A lot of stuff going on at TRI right now, so I don't really want to get too stressed. But anyway, so wanted to mention that. Got that out of the way. And that's sort of like what I've been trying to do with you guys and everybody on the site over the past, I don't know, maybe 12 months or so. Is just detail, like what does a typical futures trader's life look like? And actually, one of the guys that I used to work with many, many years ago, Ray Burchett, he used to always say that actually the biggest fault of most new traders was an underappreciation of how much work actually goes into this job. Most people think it's a pretty simple job, and all you do is press the buy and sell button, and that's about it. But what I wanted to do, and I basically, as you can see, I've taken the past year here, is just I started this up in March, and here we are in September. It's just give you a very real look at what your daily routine needs to look like if you want to fancy yourself a professional futures trader. And then to that end, I thought it would be a good thing to do is I used to be a prop trader a million years ago. So I just went back to my old prop firm and I said, what the hell? Why don't we just do another one of these combines? I think they charge you like $50 a month or something to go through their sort of tryout program. So again, we teach an education program. What's it going to take for you to actually get yourself to the point where you think you can do this, including things like building trading plans. This, of course, is my trade log, what I do every single day. So I've had this up and running because I just recently started this up. And I think it's probably a good way for me to show you in real time, what this process of passing these sort of tests look like. And interestingly enough, I've been in the combine, coming back after the Labor Day weekend, probably not the best time to start up a combine because the first week of trading following that Labor Day weekend holiday week is a mess anyway. And I've just noticed that I'm not getting a lot of setups coming in here. You can see many days there just aren't any setups that come in. I did take one setup there the other day and I lost $200. Way to go, Bride! Woohoo! But on balance, I'm relatively okay with this. The most important thing for me is I just want to make damn sure that as I go through this document remains empty. I don't mind losing money, believe it or not, in the marketplace. It's not that bad of a deal. The key here is, do you follow your process goals? And do you identify setups? Do you act appropriately? Do you do all your homework? Do you pick your levels? And if you've vetted your setup and you go through this, the math that I've actually done on this particular trading plan, I think I'm looking to probably take about 15 to 20 trades over the course of the next I'll probably say the next month and a half, 2 months kind of idea. Because I notice I'm taking about one trade a week kind of idea. So it's going to take a while to actually hit their benchmarks. But the point of the matter here is process goals. Absolutely most important thing. I'm not actually in this to make a fortune. The good thing is if you do follow your process goals, then the money will just take care of itself. And frankly speaking, I just haven't had many setups to work with here. So I don't really care. I'm just not taking any live trades. having some fun paper trading. I always think it's a good idea to continue sharpening your tool belt and paper trading. And just FYI, in this Top Step Combine, I'm only trading crude oil. I think it's a good idea that you don't overwhelm yourself with a whole bunch of different markets and contracts. When you're right out of the gate, just trying to pass one of these testing things, I can always add markets down the road. But for the purposes of these guys, this is only setups for crude oil. So as you can see, we did have a very interesting level come in here on the S&P 500 there through the euro close. Did set up a setup, and you can see it's just working away, doing its thing. And I've done this off of a micro contract, and really all I care is this is muscle memory. Just, our best practices. You want to, process goals. You want to be consistent in your behavior day in, day out. And actually, that's sort of what I do with you guys on this daily setup. And when I do these videos, actually, I like to walk through this. I think it's a pretty good routine. So, demonstrator of best practices. Hopefully, you guys are learning from this. I don't know how many people actually watch these videos or not, but if anything, post in the comments your thoughts. Do you have a daily routine? What are some of the things that you like to do in your daily routine that maybe you don't even see me doing, and I might look at your comment and go, actually, that's probably a good thing. I do 25 push-ups before I even turn the computer on just to make sure my body is nice and awake. I don't know, could be something along those lines. Anyway, so here we are, Friday the 15th. It is this big options expiry. In fact, actually, I think I even made note. And actually, I say I'm in the habit. I'm such an old timer at this. I still call it quad witching, but like I said, they got rid of the stock futures market. So anyway, also too, we had sort of a flurry of econs here this morning. So it was kind of right through the opening. 5:30, 6:15, 7 a.m. We had a whole bunch of funny little econs. We can review how those went. But that definitely affected trade as well. And I have a general rule, and I think it's a good idea that you don't ever really want to try and strap on a trade heading into these econ event windows. So you can see I put myself on the sidelines as we went through that. So heading back to sort of the daily routine, I think it's always a good idea. How is your computer equipment doing? Have you set yourself up for success? What's your diet and your exercise routines looking like? Actually, my diet is pretty healthy. Eating well balanced diet, I think, of late, not too much fast food. I indulge myself. I get one of those chicken wrap things at McDonald's when I take Liam to McDonald's. They're not too bad, but I don't just sort of pile on the burgers and fries and stuff. Exercise, we could always use a little more of that. I had a problem with my shoulder, stupid COVID sort of hangover nonsense. So I've been doing those exercises, but on balance, I wouldn't mind trying to get a little bit more exercise in my life. Sleep, I have to get up damn early in the morning, which means that I have to force myself to go to bed. As soon as that clock reads 2,200 hours, I have to be in bed. So that's a tough thing for me. If anything, it's the one reason why I really want to make a pile of money with this. Go buy a place in like Portugal or something like this, and then I can live actually a real life. Again, living on the west coast of North America is the worst place to be living as a trader, unless you're like Zach, who's in Hawaii and it's it's the middle of the night for him. All right, so what did the world look like when I woke up this morning? I always think it's a good idea for you guys to take a look at the world. What does it look like when you first start your day? And of course, make note of the various different econs and stuff that are coming down the pike, so you sort of have a pretty good idea what's going to happen. So Europe was on a relatively positive note. China came out with a little bit better econs than expected. Of course, with China, you never really know for certain whether you're just getting fed a line of horse shit or whether it's actually real. Um, I suppose they have a whole bunch of economic activity because now they're actually tearing down all of the half-built buildings, which is such a fucking criminal scam. I can't believe what a scam that country is. But anyway, it is what it is. So, if you believe the data coming out of China, great. The interesting thing about the capitalists is they don't really even care about things like, human rights or democracy or freedom. That none of that means anything to the capitalists. And if they can have some sort of government body endorsed data that's printing higher, great, that works for the sales pitch. Hey, everything's awesome. Invest in China, blah, 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 blah. So I don't know. Are we turning the corner? Remember, we had an interesting conversation about China. I don't know whether this is an efficient use of our time today or not, but I'm not quite sure where I have that. Let's see. Maybe we even have it in here. China. Where is China? There it is. China trade. So remember, we were kind of thinking maybe a month or two ago that China was going to try and turn the corner. Probably the best place to look at this is over on the Hang Seng. Um, and we were thinking things like bullish bot setups. Remember, we had one low, two lows. Are we going to get a breakout here? And then the market crapped out and broke through those lows. So you can see they're still trying to turn this thing back up. We've got one low, dead cat bounce off of the low. We have a second low, and then, as I said there a moment ago, that GDP data. It put a bid in the market here. I don't know whether that's enough for us to declare a bottom yet. Brian, he'd like to see three higher lows. It's interesting too how the 25 level is still a million miles away from where we are right now. So I don't know. I'm still on the fence here. I'm not totally convinced they've turned the corner. And of course, too, September, October, this is usually the worst time of year to be taking risk in the market. And I can see that. I mean, in the market, this market's all over the map. It's just crazy how risky this market is right now. So China, yeah, take it for whatever it's worth. You know what market is really hot right now? God damn sons of bitches. I think I told you guys we'll talk a little bit about overstock later. I did a little bit of nibbling on that yesterday. But gee whiz, the Toyota Motor Company in the Japanese market is just insanely strong. And it almost feels like it's like a sleeping giant has just woken up. So I was all excited about Toyota. You can see double bottoms and the whole thing. And I still have my open order working. Look at this. How embarrassing is that? So here was the double bottom and, reload zones and gap fills. And I'm going to place my stink bid against the lows. And the bastards, I don't even know. They might even see my order, right? Because there's the order right there. I mean, I'm sure they don't really care, but look at that. That's crazy how close that level is. And look at what's happened following. I mean, this is almost like the trading gods are just laughing at me right now. I mean, look at that. It's a 50% gain on the asset since that level. So you want to find a bull market in the world? Look over at Japan. That's where all the money's going. Holy crap. And of course, US tech stocks. I think we did see some more bullish news out of Japan, but you can see Japan had a pretty good day today. I always like to just look out of the corner of my eye, what's Japan doing? And my hunch is actually after the dust settles, because keep in mind, today is this funny options expiry day. I wouldn't be surprised if North America actually catches a bid through the rest of today. Now, this is the backdrop. And it's interesting how they say, futures lack direction heading into the open. Yeah, it looks like they actually took the market down first thing this morning, but like you saw, I actually didn't have a problem hunting doing a little bit of bottom fishing here. We'll see how this goes. I mean, yeah, it's up a couple bucks. Looks like it's a half decent trade idea. And really, actually, there was one person who was asking. I don't know whether this is a widely known concept in the public, but of course, old gnarly floor traders, pit traders, prop traders, whatever. This is actually sort of like a time tested tool, the VWAP, volume weighted average price. So this is kind of like the return to the mean. It's not really like I'm looking for a new bull market here. This is more just like, gee whiz, this market's fallen an awful long way here. And really, they call it a dead cat bounce, right? We could probably do things like, where's Collins dump chaser zone kind of idea. I bet you 38.2 to 50% would be in that area. Boom, there you go. Look at that, right in that window, 38.2. And I've always told you guys at any given point in time, you should expect 38.2 bounces. So that's basically what this trade is. So anyway, yep. All right, thank you, sir. I will say that coming out of the gate here today, I was pretty surprised, to be honest with you, to see how they knocked the market down here. I go through this very regular routine where I just simply ask, where can I buy? Where can I sell? And as you can see, I like to trade against horizontal support and resistance. And we actually came through one support line here against these funny little lows here in the 30 SMA and the 200 SMA. But notice we banged into the ATR, and I love this ATR script. A gentleman by the name of John, I think it was, built this script for us, and it's just simply a visual representation of where that average true range. And once you get beyond that average true range, then actually you're looking for like extraordinary market state pushing you beyond ATR levels. And really, the market doesn't really like to go beyond. In fact, I think I've told you recently, if you ever see a market move like 2 to 3%, then odds are you probably the market's actually just begging to reverse. So I like using this ATR script. It's part of our, I guess it's part of our level 3 program. We talk about stop management and using ATR to help you manage stops. So here's a really good example of we slammed into ATR, probably too far, too fast, and you can see the dead cat bounce is happening as we speak. So that, and again, I'm not looking for the market to move to new highs. I'm just looking for the market to return to the mean. Also, too, because it is that options expiry, we can always go over and ask. Actually, there's some really interesting data coming out of the VIX options here. I actually think this is exactly where they want the market VIX wise. And if we look at our volatility index, you can see, yeah, you can even see we're right down at the bottom end of the range. And they always say whenever you get down into sort of low teens on the VIX index, number one, you don't often actually see the VIX below 10. So you can see it very rarely likes to be below like single digits, almost never. There was a little window here back in 17, 18 where we got into single digits. And then, of course, all of a sudden sicknesses started to happen in the world. Somebody had asked me, and maybe in the after party, we can look at this. Maybe we'll look at all of the options in a little bit of detail. I think for the purposes of this conversation, because I'm already running out of time, we'll pop on back over here. And then as I said, I like to track all this stuff religiously. So again, how much, what is your job as a trader? So it's interesting if you look at the open interest heading into the expiry here today. This is the big monthly contract. These are the open interest levels. And on the call side, you can see that they probably don't want to have to pay out this 77,000 guy. That's a lot of call options. And, that represents, the notional value, if this option actually gets exercised, that's a lot of money. I'd have to get a calculator to calculate. That's probably in the hundreds of millions of dollars, if not $1 billion. But also notice too, and this is interesting on the put side, everything that with the market sitting right now at about 445 or so, I would have thought into the end of the day that they would prefer to try and have this market as close to this 450 as possible. If they can get the market to go out at like 451, 452, 453, whatever, all of these put options all expire worthless. And the rule is that 90 to 95% of all these options are written by institutional guys. A lot of these options, the calls, there's a bunch of retail people in there. So, man, it doesn't surprise me uh, if you see the market actually move where these things get exercised, because it's going to be people who maybe own the S&P 500 SPY. They just buy 100 shares of the ETF, and then they just write the covered calls. It's a great way to earn income off of ownership of stock. But puts, this means if you wrote these puts, it means you must buy this asset if you get exercise. So as a result, most institutional players do these. And just notice above 450, look how the open interest just disappears versus below 450. Look at all these chunky numbers here. So this is a great master class, master lesson on how you can use put open interest to give you an idea. If the institutions had their choice, where would they like to see the market go out? And my hunch is if they let the market go out at 450.01, all of these options expire worthless and Wall Street goes cha fucking ching. Anyway, maybe they use the F word, who knows? So I think there's a lot of incentive for them to bring this market back into that 450 area, into the close. Now, looking at this chart, though, there is the SPY, and you can see we're 445 right now. They were laughing as of yesterday. So it's a little surprising to see the violent gap lower here today. This, I tell you, this does surprise me quite a bit. It's 9:30 here, so we still have basically about 4 hours to the close. But if they do close this market out around this 445 area, then as I said there just a moment ago, what did I do with the sheet? Yeah, 445, that's all the way down here. That means that this 21, 18, 17, 19, 41, all of these guys are all going to expire in the money. That means Wall Street is actually going to have to buy quite a bit of stock here. So like I said, that surprised me. Now, the rule is that you want to look for the heaviest open interest contract, and that's the anchor that they're using. So it is interesting how the heaviest open interest contract is that 445 level. So maybe that's a bit of a tell as well. But as I said, I'm a little, and then keep in mind too, all of these call options, if they expire the market here, all of these call options all expire worthless. So if institutions did write a bunch of these calls, well, another double cha-ching. I suppose we could take a quick boo at the Bitcoin. Algo's putting in some funny signals here right at the moment, but seeing some really interesting cross messages here on crypto. I mean, look at this funny, odd sort of disconnect. We've got Bitcoin actually putting in an M top, Ethereum putting in a bit of an M top, Litecoin just going for it. What the hell's going on with Litecoin? Why would that happen? A little bit surprising there. And then I remember I had made reference earlier. There are individual altcoins that are looking extremely bullish. So this is one name that a TRI principal, Sjord, is super interested in. I did buy a whack of this because, Brian and his 78.6 levels. Here's a really good analogy where I tell you that quite often over time, turns out that we did the fib off of this and we picked 78.6, but look how the market basically put in a big fat W pretty much right off of that level and then decided to launch higher. So I'm okay with being long here. Could I added some more down here on this double bottom? Sure, I suppose so. But I have got enough on the books. I'm happy with that position. And of course, like I said, Stuart's got a serious position on here, which I absolutely love. And I had sort of outlined this trade on the Coinigy show on Wednesday, where this is actually like a bullish bot setup: one low, two lows, three lows, W's, and look at her go. If crypto is so crappy, why the hell is this happening? That doesn't make any sense. So it's a bit of an odd market state right now. We've got some that are just totally kicking it and actually pointing higher. Like I said, what the hell's going on with Litecoin here? And yet you got the big boys who I think have been securitized by Wall Street. So they're bitches of the futures and the triple witching expiry and all that. And on a daily basis, just like I do this kind of analysis on every single one of the markets I follow. So, like I was telling you earlier, crude's just absolutely schizophrenic here today. So there was nothing I could do on this morning. I was even contemplating coming in on the long side down in here, and it was just an absolute mess here, just straight down, straight up. And it basically, I mean, this unfortunately is a hallmark of triple witching. Is Where's the setup? Look at this; it's just straight down and then straight back up. I'm like, what the hell? You can't do anything through that. So, and you can't just go strap on a contract here. The volatility here, and I would even say this is horizontal support and resistance. Wyckoff check levels. I was super interested through here. And then they go and they inject this kind of volatility in the market. Yes, it looks like it's an inverted head and shoulders. I mean, I suppose you could have just risked this small little candle right here, but that's just too much heartburn for me. I can't risk real money on that. So I got kind of frozen out of the crude market today. As I showed you on that ES contract, these are the kind of bottoms that I like to trade. They're nice and polite. They're nice and quiet. At important levels, ATR levels, nice double bottoms, blah, 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 blah. Keep it simple, stupid. Don't overthink this. But at the same time, too, at least I have some structure to work with here. All right. So finishing off our conversation here today, when I was looking at the Bitcoin chart here today, going through my daily routine that I go through on a regular basis every single day, want to be some sort of mass asset manager, money manager, day trader, whatever you want to call it. I look at gold, I look at crude, and at the time when I was looking at it first thing this morning, this is what I saw first thing this morning. I saw the most beautiful empire top here. Huge amount of risk, though. I can't take that kind of risk. It's just too much money. And then remember, we showed you the current chart. We went zipping all the way down. So the empire was right. And then we came zipping right back up to the top. And that's classic contract roll, triple witching, insane volatility, very, very difficult to position. So I guess position day trade, if there is such a word. Stock market actually had an AB equals CD objective hit there. Boom, 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 boom. So not a big surprise. We saw the big dump, and I took my long off of the tag of this level here. I was thinking about hunting shorts here this morning. You see, we have a nice little fractal, and that sort of lined up with the empire on crude, but just nothing set up for me. I didn't have any kind of counter trend rally to short against these highs. But as I said there a moment ago, actually, I waited patiently for the market to dip down into these candle body lows, into this ATR level, and actually I strapped on a little long there. And then what I was working my way towards was what the hell's going on with a Bitcoin. And this chart, oh Jesus, this looks horrible. So 1, 2, 3, 4. Is this a valid megaphone top? I always seem to screw these things up. We came into this down trend line here this morning, put in a cute little double top breakdown right at sort of megaphone levels where markets should break. And as you can see, a little M top, and we're working our way lower here, which is ironic because the algo has just been getting swished back and forth, and that does sometimes happen in trading. So until I actually see some sort of W's or something along here, there's just not a hell of a lot for me to do with Bitcoin. And as I was kind of showing you there earlier, getting some really mixed messages. I mean, there's no W, that's a big fat M. So me as sort of like a day trader, swing trader, because this is like a half-hour chart, got to leave that alone until it starts Wing out. But then you got this funny situation over here with things like Litecoin and things like Ruin. I mean, that to me looks like a valid setup that's just working away. So it's a bit of a mixed bag here. And maybe, what this might also be a function of is, FTX said that they had to sell, tons and tons and tons of assets. So maybe they are on the sell side of things like Bitcoin. Maybe they're on the sell side of things like Ethereum. Do they maybe, I know a lot of people actually didn't really buy into Litecoin this last cycle. It was very, very quiet. But maybe they don't own any Litecoin. Maybe they don't own any of this Rune because it's too new of an idea. So as a result, this is really what this disconnect you're seeing in the marketplace here right now is really a function of SBF just keeps fucking us over here in crypto market. It just doesn't end. So, all right, there's your rant for Friday. Should be an interesting week coming up. Of course, we've got FOMC this coming week. Interesting to see how the US dollar just keeps climbing the wall of worry. But at the same time, too, this is off a 4-hour chart now. You start seeing, we're seeing a bunch of bearish divs starting to form here. From what I understand, the Fed is expected not to raise rates, and the econs coming out today, and I didn't really see anything that's like, oh my God, we're back into hyperinflation. If anything, what I saw was strong data from the economy, meaning the Fed can't lower interest rates anytime soon. Import prices, actually, this isn't real time. Where are we here? And I was supposed to stop talking there, wasn't I? Okay. Well, I guess we're going to have to leave this for another day. In fact, actually, Chris and I do a little bit of an econ review on our weekly newsletter for the Sunday show. So what I'll just leave off with, just a quick boo here. The econs that came out here, actually, that's next week, isn't it? Where the hell are we? Today? Friday. Here we are. Retail sales, actually that's Brazil, sorry. Import prices, pretty firm, not really out of line, but firm. Export prices, very, very strong. That's actually going to help the Americans' balance sheet, so that's a good sign. Empire State Index was expected to be an absolute train wreck. Remember, the Fed wants to see a weaker economy, came in pretty strong. That's not going to help the Fed wanting to lower rates anytime soon. Industrial production came in much stronger than expected. That's not going to help the Fed lowering rates anytime soon. Industrial production came in much, much stronger than expected. Market was actually looking for the industrial production to come off, and it actually is showing basically 2.5% annualized growth. That's not going to lead the Fed to lower interest rates. So all of the econs here are pretty firm. And then at the same time, this is a consumer-based economy. So they go over and they ask, hey, consumers, how are you feeling? And, Chair Powell has said, I want you to feel pain. I want you to be unhappy. And that's exactly what he's getting. This number actually came in less than expectation. So can't lower rates. Consumer feels like shit. What a wonderful backdrop. So with that said, keep in mind the stock market, and I don't even know whether you're aware of this or not, but the stock market technically is supposed to be nothing more than just a sentiment of how the public is feeling about society. And you can see that data there, the seeing the consumers as unhappy as they were, that did not fill the Wall Street people with a lot of confidence today. Having said that, this is a W. Pullbacks into support. This is one of these scenarios. Pullbacks are buying opportunities, right? Because, just everything you've heard that Beamish guy rant about. What do you think the odds are? Whoops, where are we here? What do you think the odds are that where we stopped on the downside here was a reload zone where institutional players are going to step in and buy all the positions that they sold? I'd say probably pretty good. So let's see what we got here. We'll finish off the video today with this. Are we at or below reload zones? Oh, look at that. So not only was that an AGR level come into trendline support, candle body lows for trade location, wicks and tails like to be eaten. Oh, and it turns out it was a reload zone as well. What a surprise. So nobody should be shocked at what's going on here. At the same time, too, I would imagine there's quite a few people that got their short and curlies caught in the ringer here this morning. Okay, let's head on over to the after party and hang out. We've got a special treat. Zug, still trying to nurse a broken ankle, is going to talk to us a little bit about DeFi farming today in our after party show. So it should be very educational. If you are a TRI member, pop on in. You probably will learn a thing or two from the Zugmeister. And if we're really lucky, he might even have an idea or two for us to maybe even consider mining as well, or farming, mining. I don't know what you want to call it. I guess we're about to find out, aren't we? All right, have yourselves a great day, everybody. We'll see you all for Sunday's broiler chicken show. If you can take advantage of these setups, they're setting up. So live by the sword, die by the sword. You see where I'm long. If we get a pop up top here, the old Beamish is going to be banging out doubles, as they say. All right, have yourselves a great day. All the best, and bye for now.